Okay, so massive news on the FTX crypto exchange. In this video, we're going to talk about the collapse, the consequences, and even the opportunities. This is a big one, so please stay tuned. Let's get started. This is the Hey Ed YouTube channel, and I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor. Don't construe anything that I mentioned in this video as financial advice. Always do your own research before doing anything with your money. So today we have to talk about FTX. And even if you're not in the crypto market per se, this is going to affect you. This is going to affect everybody. So it's important that you know what is going on. And I've got an awful lot of information to impart, but I'm going to try to condense it for you. Okay, so if you see some herky-jerky movements in this video, it's because I'll probably do a ton of editing. I'm going to be talking a lot, giving a lot of information, and then I'm going to edit it down to a reasonable amount for you. So I've got to give a quick shout out to my friend Rupert in London, known by his friends as Mad Dog. So hello, Mad Dog. This is for you because you requested it. Okay, so the reason why this FTX collapse is such a big deal is because FTX is the second largest crypto exchange in the world, right, behind Binance. And a lot of people are referring to this development as a Lehman moment. And for those of you who are too young to understand that reference, a Lehman moment now has become kind of an industry phrase for when a really big financial disaster happens. Because the Lehman Brothers demise was really kind of the poster boy of the 2008 to 2010 financial collapse. When Lehman Brothers finally filed Chapter 11, that led to a $600 billion loss in assets in the market. Now, to help you conceptualize the whole impact of the crypto industry, let's take a quick look at a short timeline. Now, we can see that Binance was founded by a gentleman nicknamed CZ in July of 2017. And then FTX was founded by this gentleman, Sam Bankman-Fried, in May of 2019. Both these companies are not very old. I mean, you got to remember, the entire crypto industry is still very, very young and is still considered the wild, wild west in a lot of respects. We're going to get more into that as this video goes on. Now, if you recall, earlier this year, we had a very big event in the crypto industry where the Luna tokens just got created and affected the entire crypto space. And it was really the start of the current crypto winter, we're calling it, that we're all experiencing right now. Now, one of the reasons why the FTX collapse is such a big deal was because FTX was actually considered a white knight, a kind of savior during those early days when crypto exchanges were just falling left and right. I mean, here's one headline, right? Bitcoin billionaire Sam Bankman-Fried bails out embattled crypto firms BlockFi and Voyager. But even with his efforts, we had very major firms fall to the wayside. Firms like Celsius and Voyager, which were very big deals. These were brand name exchanges. So now this savior, this anchor of the crypto industry, now they have filed for bankruptcy just now. And it all happened very quickly. In less than a 1 week time span, it went from being the rock solid behemoth of the crypto industry to being worthless, to filing for bankruptcy in less than a week. Boom, it happened really, really fast. Okay, so I'm going to break this video down into three categories, right? The collapse, the consequences, and the opportunities. Now, remember, I am going to try to keep this video as short as possible, because this is going to be a very important video. So I do hope that you try to watch it all the way through. And please, give this video a like if you don't mind. It doesn't cost you anything and helps support the channel. And leave a comment below. Let me know what your experience is with FTX or the crypto industry in general. Okay, so Chapter 1, the collapse. Now, I want to start off here by showing you a clip showing the founder and chairman of FTX, Sam Bankman-Fried, testifying in front of Congress. I mean, now looking back, it's laughable. And you can see what kind of a hypocrite and a con man this guy turned out to be. But I want you to hear a little snippet of his testimony in front of Congress under oath. All right, let's take a look.
We strive to conduct all of our business in a transparent and regulated manner. I think that it is coming, and I think it is important, and I think that it is healthy that the industry will be regulated. I think it is also already regulated in a number of ways. I think that there are points that need to be addressed to give oversight of various aspects of the industry that do not have sufficient oversight right now.
So this is what this person was supposedly representing. He was supposed to be a champion for the crypto space and touting the reasons why the crypto space was superior to the traditional financial system. And in a very short period of time, in just a 3-year period, he grew this company into a $32 billion crypto exchange because he was supposedly growing annoyed with crappy platforms. And as of a week ago, he was personally worth over $16 billion. He was actually the wealthiest person in the world under the age of 30. But then he tipped his hand. For those people who were paying attention, along the way, he actually described his scheme. And why these institutional investors did not pick up on this, I don't know. They must have been blinded. They must have been starstruck or something. Sam Bankman-Fried reveals how DeFi works like a Ponzi scheme. As the Commodity Futures Trade Commission deliberates whether or not to allow FTX to algorithmically settle margin trades, CEO Sam Bankman-Fried recently revealed how DeFi works similar to a Ponzi scheme. So just bear with me for just a minute or so while I read to you the transcript of a speech that he gave one time, where he describes exactly how his scheme works. Pause and rewind if you need to. In an attempt to explain how yield farming works, Bankman-Fried asks viewers to imagine a box. He says, you start with a company that builds a box. The marketers of this box will attempt to sell it as some sort of world-changing protocol. So again, what he's saying is, all right, so let's just start with a box. The box is empty. There's nothing inside it. It's just a box. This is the way he's explaining his scheme. Said, all right, so let's say you just start with a box. The next step is for developers to issue a token. This token is then given away or purchased, giving it a larger market cap, causing other market participants to notice it and view it as valuable. The FTX boss then describes how the high returns derived from these boxes entice new speculators to put more money in it. Okay. The fact that there is now a large amount of money in the box causes others to think it must be legitimate and to put more in. This can cause the token price to rise rapidly, and the whole process is amplified if the total number of tokens available is small. Matt Levine intervenes at this point in the conversation, describing this as cynical and likened it to an outright Ponzi scheme. Bankman-Fried says that these boxes mostly value market participants' perception. So at this point, it is important to point out that when we're talking about this FTX scheme, we are actually talking about two companies, FTX and its sister company called Alameda Research. Now, the Alameda Research, they act as the market maker for the FTX token. Now, what a market maker does, the market maker sets the price of a token, right? It's not like the overall free market where the free market decides what the value is. The market maker sets the value and the people buy it accordingly. And then as they buy more, they move the price up. But let's move on. Despite acknowledging that it's unclear whether these tokens should have any market cap, Bankman-Fried is happy to sell them on his FTX exchange. So if Bankman-Fried is not sure these tokens should even have a market cap, why is he willing to sell them? And if he agrees that the whole process could be viewed as cynical, why does he participate in any of it to begin with? Okay, so not only did he know what the scheme was, he invented the scheme. So what other crypto companies would do out there, let's say a company develops some kind of brand new protocol that's going to change the world, and they go to Bankman-Fried and say, hey, can you put this on the FTX exchange? And they say, well, listen, have my buddies over at Alameda Research, and it's not a research company, it's a market maker, right? You go to those guys, explain your protocol to them, and then if they decide to make a market in it, then we'll let them set a price, and then we'll sell it on the FTX exchange. And people at Alameda Research, what they do, they keep a large chunk of those tokens of the company that they're making a market in, right? And then they put a value on it and then sell it in the open market. It's free money. Okay, so they're making money out of thin air. Kind of sounds a little bit like the Federal Reserve, doesn't it? They're making money out of thin air. They set a value and then they put it on the FTX exchange, and the FTX sells it, and FTX makes money on the transaction costs. The FTT token was invented by Alameda's sister company, FTX, and represents a large part of Alameda's reported $14.6 billion balance sheet in one form or another. So, so here we have one hand washing the other hand. Okay, so these people are making up values for worthless tokens, also known as vaporware. Okay, they're not anything; they just made it up, and then they sell it in the open market, and people see the valuation on it, and they think, oh, it must be legitimate. I mean, FTX is the largest crypto exchange in the world, so it's got that patina of legitimacy, when actually it wasn't legitimate at all. So then it got exposed. I won't go through the anatomy of how everything happened, but let's just give you the Reader's Digest version, okay? Sam Bankman-Fried steps down as FTX CEO as his crypto exchange files for bankruptcy. So in less than 1 week's time, the FTX crypto exchange went from being the second largest crypto exchange in the world, highly respected, considered the anchor of the industry, to being bankrupt. And this is going to have far-reaching consequences, not just in the crypto space, but it goes deeper too. Okay, so let's talk about the consequences of FTX evaporating overnight. Well, of course, the obvious consequence is the value of the FTT token, right? FTT is the token for FTX. You can see the history of it. It started over here in 2021 at zero, and then had a meteoric rise, and in a matter of a week, boom. And here's another little chart of the most recent performance. Early in the week, Binance was started making overtures to FTX in order to buy them out. So Binance was offering to be the savior to FTX, but it was conditional. They wanted to do they want to do some research first, so they dodged a bullet there. But it's kind of funny. There's a little bit of drama that went on here during this channel. If you're one of those people who were short FTX, I would love to hear from you in the comments below. Please let me know how well you did on your short position. I would love to hear from you. Okay, so let's take a look at some of the immediate consequences of what happened with FTX this week. Ontario Teachers Pension reveals $95 million of exposure to troubled crypto exchange FTX. And look at these poor people. Tom Brady and Gisele Bündchen put their $650 million fortune into maximizing their stake in FTX cryptocurrency. Oh, Tom, after working so hard, being beat up on the football field for years and years and years, and you take your money and put it into FTX. Oh, ouch. And here are a few of the celebrities that were touting FTX, had lots of exposure to FTX, and were promoting it. Boy, you got to wonder what's going through their mind right now. And there's some other immediate consequences in the real world. FTX purchased naming rights for the former American Airlines Arena in Miami in early 2021, a 19-year deal sealed for $135 million. It also sponsored an esports team for over $200 million and has seen its logo plastered on every umpire in Major League Baseball. This suggests that FTX spent $500 million or more on sports marketing alone. And of course, the FTX collapse, the second largest crypto exchange in the world, had an immediate effect on the overall crypto space. If you look on the right-hand side of this chart, you can see all of these cryptos that were going down in tandem. They were just selling everything. Everything crypto-related was being sold off, regardless of the quality of that particular token. Okay, so those are some of the immediate consequences. But in addition to that, there are some actual structural consequences going on in the entire crypto space because of the FTX collapse. Now, this is one tweet that I found. I'm hearing from reliable sources that Crypto.com, KuCoin.com, and several big OTC desks had huge exposure to FTX and are basically screwed. And here's another tweet. OKEX, Bitfinex, Wobi, Crypto.com, KuCoin are all playing with the same stupid shell game with their tokens as FTX did with FTT. These are just posts on Twitter, right? So I'm not saying whether it's true or not, but the point is valid. You should not be trusting any exchange right now. I don't care how good you might think it is. I had one person in my group just this morning send me a message in our WhatsApp group saying, thank you so much, Ed, for advising us to have all of our cryptos off of exchanges, because his primary exchange is FTX. Well, it was FTX, right? And because he took my advice and removed all of his crypto from FTX, he saved a lot of money. He saved everything, right? He didn't have anything on the exchange. So Boy, I cannot stress this enough. I've said this so many times over the course of the past several months that nobody should have any assets sitting in any exchange. Crypto exchanges should be used for just that, exchanges, for exchanging, not for holding stuff. Don't hold any of your assets on any exchanges. Look what happened this year. We've seen many brand name exchanges go out of business. And a lot of people were wiped out, that everything they had in their accounts is gone. So you should not be doing that. I don't care which exchange we're talking about. Don't keep anything, nothing on any of these exchanges. If you're hell bent on holding on to a crypto, put it onto an online wallet like Trust Wallet or Exodus. But better yet is to put it on a physical hard wallet. That's the best way to do it. Now, you shouldn't be in cryptos right now in any large degree right these days anyway, in my opinion. But if you really want to hold on to cryptos, don't hold on to it inside of an exchange. There is no crypto exchange in the world that is safe right now. None. Look, what more do you want me to say? FTX is considered, it was the second largest exchange in the world, and it was considered the anchor. All right, it was touted as the safest, as the best, as the highest quality crypto exchange in the world. So don't trust any exchange. This is from BlockFi. We are shocked and dismayed by the news regarding FTX and Alameda. We, like the rest of the world, found out about this situation through Twitter. Given the lack of clarity on the status of FTX.com, FTX US, and Alameda, we are not able to operate business as usual. Our priority has been and will continue to be to protect our clients and their interests. Until there is further clarity, we are limiting platform activity, including pausing client withdrawals as allowed under our terms. We will share more specifics. Okay, so there you go. BlockFi is telling you you can't get your money out for now. Okay, and you know what? We're doing it in your best interest. They're telling you you can't get your money out, but it's for your own good. Okay, that's BlockFi. Okay, another big brand name operation. Okay, another looming consequence from all this is there is going to be tremendous pressure right now for the government to step in and start regulating these exchanges. Okay, this gentleman here, this Gary Gensler of the SEC, okay, so he's under tremendous pressure right now to start earning his pay. He's probably going to start promoting legislation in order to tamp down on crypto exchanges. This guy, Gary Gensler, he is one corrupt SOB. There is actually, I'm not going to get into it in this video because I want to respect your time, but he actually has close ties to Sam Bankman-Fried and his family. And he actually helped Sam Bankman-Fried navigate the regulatory waters. This guy is corrupt as the day is long. He's a piece of garbage, and he is the chairman of the SEC. So this man is right in that evil cabal out there looking to control your lives, and he is corrupt. But I am concerned about what kind of regulatory efforts are going to come out of this development. And of course, one of the most important consequences of what just happened with FTX is the overriding atmosphere toward the crypto space in general. I'll tell you right now that it's going to be exponentially harder to get institutional investors interested in anything in the crypto space. All right, the institutional investors, they have people to answer to. So for those of you out there who are developing some legitimate brand new protocol for the crypto space, when you go out and start approaching institutional investors, your chances of raising money from institutional investors just became far more difficult because they're gonna, whereas they would have looked at you closely before, now they're gonna give you an anal exam with a microscope before they do anything with you. And even then, they might not put anything in just because they've got people to answer to and they don't want to take the. Now, in times of market uncertainty and market turmoil, there is a pecking order by investors out there about what to sell. They always sell the riskiest stuff first. So we'll start with the crypto, then they go to the stock market, then real estate, boom, they work their way down. We are in an everything bubble, by the way, right now, where the whole market right now is on very thin ice. So the cryptos are going to go down first. Now, the crypto space, remember, has an entire market value of less than $1 trillion. As of today, it's probably 700 billion or less. So it's a tiny area of the market, which makes it much more volatile. So even though you might get a crypto token here and a crypto token there that does well in a day or two or three, these little rallies are going to be short-lived. Okay, you have to think of investing this way, right? Whether it's cryptos or stocks, I don't care. When you take a major dive in your investment in a short period of time, it's equivalent to an amateur boxer being hit in the face full on by a professional heavyweight boxer. Okay, you're going to go down on the mat and you're not going to spring up. Okay, you're going to need time to recover. That's what's going on here. The crypto space has been decimated. We had the first big punch back in the spring with Luna, and that started the crypto winter. And now we get this knockout punch where it's going to be on the mat. Cryptos are going to be on the mat for quite a while. Now, if you're a trader and you're nimble and you're lucky, you might be able to capture some really quick one-day moves in any given token. But you don't know which token is going to go on any given day, and it's just really risky. Now, remember, this is not financial advice. I'm not a financial advisor. This is just one man's opinion. But I do know how the market works. And you have to learn how the market works, too. This is a game, right? You got to put yourself in the shoes of the street. What is the street thinking? Remember, the market is always right. Never argue with the market. When I started predicting a market sell-off earlier this year, I got a ton of pushback. And when I started predicting Bitcoin seeing $14, I got a lot of pushback. And now I'm going to lower my prediction on Bitcoin. Not only do I think 14,000 is in the cards, I think it has a shot at 10,000. So there's more damage to come. There is one thing that Wall Street is, that's just a general term, right? But there's one thing that Wall Street hates more than bad news, and that is uncertainty. I mean, Wall Street can take a piece of bad news and look at it in context, right? They can say, all right, so that company had a little bit of bad news there, but they have all these mitigating circumstances where in the end, I still think it's a good whatever, all right? But when it's uncertain, when you have uncertainty, they have no way of rationalizing being in that particular asset. The default mechanism in that scenario is to sell. So Wall Street's default reaction to periods of uncertainty is to go to cash. And right now, the future of the crypto space is in question. People don't know all the tentacles that FTX has out there that are going to sour. Remember, FTX was the second largest crypto exchange in the world, and they had investments in all sorts of different projects. Okay, the FTX token is everywhere. So we have no real way of knowing what the final damage is going to be yet from this FTX fallout. Listen, nobody knows for sure yet what the total damage is going to be from all this. Again, it's kind of, in that regard, it is like a Lehman moment. Okay, so I don't want to come off entirely as doom and gloom. There are some actually really sexy opportunities that are going to come out of all this. So let's talk about potential opportunities. No matter what kind of market environment you are in, there are always opportunities if you know what you're looking for. And now it's a combination of being patient, being disciplined, and being smart. When the dust settles from all of this, out of the ashes are going to come some really good buying opportunities. A lot of cryptos are not going to survive this. They're going to be gone. But the ones who are left standing, if they're left standing, that will tell you something. All right, if they can survive this nuclear event, then when confidence and faith come back to the industry, they can really, really fly. Okay, now I think it's going to take a while. I think it's going to take a while for us to get through this period. But you should use this period of devastation to start putting together your wish list of things that you will like to take a position in when the time is right. Personally, I don't think it's yet. But again, even during this period of uncertainty, there are ways to make money. And in the Hey Ed WhatsApp group, we talk about these opportunities, and we're doing great. We are in programs that are making us money every single week in the face of this kind of a market. So I invite you to join the Hey Ed WhatsApp group. So just shoot me an email. I'll have my contact information in the description below and ask to join the Hey Ed WhatsApp group, and I'll send you a link. We have a wonderful group of people. It really is a lot of fun and really good-hearted people. And we're frankly crushing it in the project that we're in. Even in this market condition, we're making money, and we'd like to have you join the group. So if you're pretty depressed these days because your crypto is caught up in this big net, just know that there are alternatives. There are things you can be doing. You don't have to be a victim in this, okay? And also, it is worth mentioning here that I do have a list of instructional videos that I call trading tricks. If you subscribe to my channel, click on the videos button and click on the playlist button and go to the trading tricks videos. And I've got several videos there, really short videos that teaches you some tricks of the trade when it comes to trading the market. I think you'll find them very valuable, especially these days. So you should check out those videos. Oh man, I've been sitting in my butt here for about 3 hours talking into the camera, talking about, this is a very big topic. So I've got a lot of editing to do. But for now, Edward Anderson signing out.
Copy that.